Hello and welcome back to our third demo video. In this video we're going to be working on problem 9-4B, which should coincide with your 9-4A homework problem. So in this one, this problem is actually pretty simple. What we need to do is do our journal entries. So we are Stellar Delivery Services, and we have the following transactions that are related to delivery truck. So in this example, we're going to see how to, well, not only get a refresher on journalizing, but also to determining what costs do we include with our plant assets, what are examples of betterment, what are examples of simply repairs and maintenances. So okay, so what we have here, got our journal entry. So I'm going to put a 1, and then I'm going to say March 1, okay? So in year 1, on March 1st, we purchase a new truck. It's a delivery truck. They give us the estimated useful life. They give us the salvage value. They give us all the information we need to calculate depreciation. But that's not what this is asking for. This is asking us, just record the purchase of the truck. We got to keep in the back of our minds that, we got to come back to the March 1st data, and when it comes time to figure out what the depreciation is, we'll need to use that information to calculate depreciation. So, we're buying a truck. What's the asset? Delivery truck. An asset. I'm going to debit it for $32,500, and I'm going to credit. Remember, indent your credits, they always come second. Cash, because we paid cash for it, and I'm going to credit that for the same amount, $32,500. Now, what explanation do we put here? Hey, record the purchase of a truck. Cool. We're good. Put it in the wrong spot. Come on, just do it. There we go. Okay. So always skip a space between your journal entries. And we have in year 1, we're on March 2nd. What did we do? Well, we paid $600 for painting the company name and logo on the truck, okay? So we have to ask ourselves, is this an example of repairs and maintenance, or is this a betterment transaction? Well, let's think about this. This actually extends the life of the truck, right? Or does it? Probably not. But it does, however, extend the efficiency or the output of the product or of the asset. How? Well, think about it. It is a asset. It's a delivery truck. We're driving it around, advertising our logo and our company name. So this is going to be an example of betterment. We're going to debit the asset, delivery truck, for $600, and we are going to calculate, credit cash for the $600 because that's what we paid for it, right? What's our explanation here? Well, the explanation says that we recorded cost of painting the name and the logo on the truck. Remember, when we talked about how do we determine the cost of an asset, well, it's the initial cost we pay for it, and then any cost that we incur to get this asset to us and ready for service. So we can argue that to get this ready for service, we need to paint our logo and our company name on it. Okay? Then on December 31st, again, we're in year 1, so I'm going to put my 1. The only reason why I'm putting that 1 there, because they don't give us years here, right? They just give us year 1, year 2, year 3. So had they given us years, I would have changed it, okay? So year 1, December 31st, we need to book depreciation, okay? So we need to figure out, first of all, what is our depreciation, okay? So I'm just going to come over here just to make it a little easier for us, okay? What's the cost? Well, the cost is the $32,500. We had to add something to that truck to get it ready for service. We had to paint our name and logo on it. So, to that, we're going to add I'm just going to say, paint for $600. So what then is the cost of our asset? It's $33,100. Okay, cool. What is our salvage value? Well, we need to go back to the problem or go back to the March 1st transaction, and they tell us that the salvage value, again, I'm just going to abbreviate, is $6,850. That means that at the end of this useful life, which is 5 years, we estimate that we're going to be able to sell this van for $6,850. So what then is our depreciable cost? Well, the $33,100 minus that's K11 minus the $6,850, and if my math's right, that should give us $26,250. This is the depreciable cost. What's the useful life? I'm just going to say life there. Well, they tell us it's 5 years. Okay, cool. So if I divide my depreciable cost by my useful life, I get my depreciation for the year. That's K13, looks like. Yep, okay. I get $5,250. Now, we need to book depreciation. So in order to do that, I'm going to debit depreciation expense, and I'm going to credit accumulated depreciation. For what amount? Well, I can't take a full year's depreciation, right? I bought this in March. So let's think about this. March, April, May, June, July, August, September, October, November, December. I have 10 months of depreciation. So I'm going to take 10/12 of a year's depreciation. So I'm going to say 5,250, that's a yearly depreciation, times 10/12 gives me $4,375. Put that in the wrong spot. That's my accumulated depreciation. Okay. So now we move on to our explanation portion. What are we doing here? Well, I'm going to record depreciation for truck. So those are my 3 year 1 transactions. So let's look and see what happens in year 2. So in year 2, they tell us July 1st. What did I do? Well, I installed an air conditioning in the truck at a cost of $1,808, paid cash for it. Although the truck's estimated useful life was unaffected, its estimated salvage value was increased by $400. So I have a change here, right? Easy to calculate. So I need to ask myself, is this a repairs and maintenance or is it a betterment? Well, It's a betterment. Why? It didn't increase its useful life, but it did affect the salvage value, right? So it had some impact on our calculation. So what do I do now? Super simple, right? I just book the entry. I'm booking it as a betterment. So I'm going to say delivery truck, 1808, and I paid cash for this, so I'm going to credit cash for 1808. Okay, what am I doing here? Well, I need to put my explanation. What is my explanation? Record cost of air conditioner. Okay. Skip a space. Let's go to a second transaction. So I'm in year 2, and this time it is September 7th. What did we do? Well, in September 7th, we paid $450 for truck tune-up and safety inspection. Well, let's think about this. Does it extend the useful life of the asset? Meaning, are we going to get an added useful life? No. Is it going to change the salvage value of the car? No. Is it going to make the car run more efficiently and effectively? Maybe, but not enough to impact the salvage value, right? This is a repairs and maintenance. So I'm going to hit my repairs and maintenance expense. Sorry about that. And I'm going to debit that for $450. We paid cash, so I'm going to credit cash $450. Okay. What am I doing here? Well, I basically just repaired the truck, right? Record tune-up and inspection. Okay. So in year 2, I need to do something else, right? The next transaction says record depreciation on truck for the year. Okay, I can do this. So I know right off the bat, I'm going to take I'm going to book depreciation expense is going to be debited, and accumulated depreciation is going to be credited. For how much? Well, we need to figure that out. Okay. So let's first recognize what is the depreciation for our time frames here, right? So let's think about this, right? Here's we start year 2. Okay, here's all the transactions, right? From January, February, March, April, May, June, July. Was that July or June? Yeah, it was July. Okay. So up until July, the value of our truck was not impacted whatsoever, right? So we get our original depreciation for those 6 months, right? For the last 6 months of the year, we changed a lot of things, right? We changed the depreciable cost of the truck because we had a betterment transaction, right? So we need to recalculate depreciation. So how exactly do we do this? I'm going to come over to the side here because this is my journal, but I'm just going to show you the transaction, okay? So the first thing we need to do is recognize that, okay, we have depreciation. Oh, this is yearly depreciation, right? We have yearly depreciation of $5,250, okay? So again, I'm here in let me do this here. I want to move this up and kind of keep everything here within year 2. You don't need to do this for your homework. I'm just doing this as kind of a separate year 1, year 2, and just to show you the calculations, okay? So the first thing we need to do is recognize that we have depreciation for half the year, okay? So I'm going to say first half of depreciation, which is going to be my yearly depreciation amount times 6/12 or 0.5, right? Half. I get $2,625. Now I need depreciation for the second half of the year, right? So the second half of depreciation. Now we need to calculate this, right? So what is the truck's cost? What's the new cost? Well, the new cost is going to, let me do it right here. Okay. The new cost of this truck is going to be our original cost, which is going to be $33,100, right? Because we have that right up here. And to that, I need to add that betterment that increased the value of that truck, $1,808. And it really helps if you put an equal sign in there. Okay, so this is the new cost of the car, right? Next, I need to subtract out previous depreciation, okay? So if I think about it, well, I already took $52.50, and the first half of the year I took $26.25. So if I add those up, I get excuse me. Remember, I didn't take that full amount, right? I only took half of it, right? So the accumulated depreciation to this point is $43.75. Plus the depreciation I took this year, I get $7,000, okay? That was my fault. I went to the wrong spot. We need to look at the journal entry that we booked, okay? So I'm booking this, the $26.25 for the first half of the year, and then I'm adding my accumulated depreciation that I have from year 1, okay? What does this give us? This gives us I'm going to abbreviate and say BV for book value after improvement, or I'm going to say betterment. Or book value after better, right? After the betterment that we did. So I'm just going to add these two up. J19. Okay, so I get a book value, new book value of the $27,908. Okay, so now I need to calculate what is my revised salvage value. Right? They told us the salvage value was $6,850. But because we added that new air conditioning, it's going to increase that salvage value by $400. So I'm going to take my old salvage value and I'm going to add $400 to it. I get a new salvage value of $7,250. Okay? I'm going to go ahead and subtract the new book value after betterment minus that revised salvage value. That's NJ21. I get $20,658. I need to figure what's the This is revised depreciation, okay? I now need to figure out what's the remaining useful life, okay? So let's think about this for a minute and work with me here, okay? So they told us that we have 5 years, right? A total of 5 years. So if I take 5 times my 12 months in a year, I get 60 months, right? But how much depreciation did I take already? Well, I took 6 months, right? And then up here, I took 8 months or 10 months, right? Because March to the end of the year should be 10 months. So I took 10 months of depreciation plus my 6, right? So that's 16 months of depreciation that we have already taken. So now we got to break it down on a monthly level here. I got 44 months left. Okay, so this is 44 months of depreciation. Okay, so I now need to figure out how much do I have left, right? How much depreciation am I now going to take for the last half or the second half of this year? So the remaining life is going to be 44. I'm going to multiply my revised depreciation divided by my useful life, and we're in J23. So all I did here was take my $2,658, divide that by my $44, and that gives me my monthly depreciation, right? How many months do we have? Well, we're the last half of the year, right? So I'm just going to say second half, right? For the second half of the year. I got 6 months, right? So if I multiply my $470 per month times my 6 months, I should get $2,817. So what I need to do is I need to add. I'm going to take my first half of depreciation plus my last half of depreciation, which is in K25. I get total annual depreciation for year 2 to be $5,442. That's my dollar amount. And that is my depreciation for year 2. Now, I'm sure you're going to have to go back and rewatch this. But we're doing the same principles, right? Or we're implementing the same principles. What's the book value? Well, I had depreciation. Don't worry about that. What is the new cost of the asset? Well, I need to take the original cost plus the increase in value. That's how I got my $34,908. We have a second step here, right? I need to subtract all the previous depreciation that I've already taken, okay? Once I do that, that gives me the book value after the betterment. Then I need to subtract out my revised salvage value, which is the $72.50. Once I do that, I have my revised depreciation, okay? I need to figure out what's the remaining useful life of this asset, right? Because I already had a total of 60 months, but I've already taken depreciation 10 months and then 6 months, so I have a total depreciation taken of 16 months. I have 44 months left to collect depreciation or to calculate depreciation. So then I just revise depreciation by the remaining useful life. That's the same thing we did in the first transaction. Figure out the cost or the depreciable basis, and then divide by the useful life. The only difference is we just kind of converted it to months instead of years. Really not that difficult, I promise you. Let's go through let's continue with the problem, right? So we're at the end of year 2, and remember, we need to put our explanation here underneath this journal entry. And we're just going to say record depreciation, because that's what we did, right? Okay. Now, come right here. Okay, so we're in a new year now, right? So now we're in year 3. In year 3, they tell us that on September 3rd, we installed a set of front and rear bumper guards at a cost of $145. Okay, so let's think about this. We just installed bumper guards, right? Did they tell us that, hey, it changed any values? It changed the salvage value. It increased the useful life. Nope, not at all, right? So this is a repairs and maintenance. So I'm going to say September 3rd. I'm going to debit repairs and maintenance expense. I'm just going to abbreviate for the cost of the bumpers, right? Or the bumper guards. They were $145. I paid cash. So I'm going to increase it I'm going to decrease my cash by $145. What did we do here? Well, we're just simply going to say, hey, we had to record the cost of bumper guards. Okay. Now, the next transaction we have is December 31st, record depreciation on truck for the year. So in this year, we didn't have any transactions. We didn't have any transactions that changed the betterment, didn't change the useful life, didn't change or didn't add cost to the asset. So we just calculate depreciation, right? And it's really, really simple for us to do. We already figured out what our monthly depreciation amount was in year 2. That's at $470. We're taking 12 months depreciation. So to figure out what my debit and my credit is, I'm just going to take my $470 per month times 12, and I get $5,634. That's my debit and my credit, okay? So now I'm just going to put in my account numbers. Depreciation expense and accumulated depreciation, okay? Oh, sorry. This mouse is so touchy. Okay. So year 4. What happened in year 4? Absolutely nothing, right? We just got to record depreciation. So guess what? The easiest thing for us to do is to recognize that in year 4, we had no changes, right? Nothing happened. We didn't touch the asset at all, right? We didn't have any repairs and maintenance. We didn't have any betterment. Nothing happened. So we are going to book the same transaction that we did for year 3. Okay? The amounts are going to be the same. Why? Because we didn't affect anything. So we're going to take the same thing, our $470 per month depreciation times 12 months. We already figured out what that amount is. It's the $56.34. So I'm just going to enter that in. and we're good. Okay. That's pretty much it for this problem. Now we're going to come back and we're going to do problem 9-5B, which will help you out with your 9-5A. In the next problem, we're going to look at disposal of plant assets. Again, if this stuff was as clear as mud, please reach out to me. I'd be more than happy to have a phone conversation, or set up a big blue button session, or a GoToMeeting, whatever. Just let me know what you need. Okay? So good luck on your homework, actually come back for our next video where we'll cover the last homework problem for chapter 9.